Good day, ladies and gentlemen. Welcome back to another edition or another session of this Red Folder strategy. So yesterday was FOMC, and I'm not going to go over that because if you really go back and look at the candle that formed at at 2 p.m. New York time, it was a pretty small candle. I mean, not to divert from this, but let's go have a look quick. There's the 2 o'clock right there, such a tiny candle, and then I just marked out this low here, and there was highs up there, so we went and take buy side there, but nothing set up here for us to actually take a trade. And as much as it looked like you could have taken a trade, you could have, but the strategy is not just to take random trades. You look for something specific, and that specific signature played out today. So let's go to what happened today. All right. So if we go, today was, I think it was CPI, and the candle, and that was at 8:30 this morning, and you can see the market just went sideways, and then when the news came, we saw this big violent up move and then drop. And at this high up here, I can't remember what was the level, but there was equal highs here. There we go. There's equal highs up here, and that was a target to run into, and I thought that's where we're going to run to. But anyways, so we created this massive candle, and as you know, the strategy, or anybody that's new, I'll link the video in in this video for you to go and have a look. We create a big push up, big push down, that creates liquidity on both sides of that new candle. So the premise of that then is for price to take out the liquidity on one side of that candle and then work its way up to the other side. So we target this high and we target this low. So off the bat, we just saw price go down, just work its way down quite quickly and then take out that low, that target. But you're not interested in trading anything in between. You're only waiting for this to happen and then look for your setup to take a long entry, in this case, to the other side of the candle. Now, I did not take any trades here, and the reason being is I don't like it when we aggressively move down and create a gap and a gap, two separate candles. If it was one candle gap and a one candle almost close that gap, then yes, then it would be of my interest. But it did not happen, and I thought, let me just sit out and see if market actually want to take this low out again. And we saw that, I think, on CPI last month. It went down again. So that was just experience for me to wait. And then obviously I did not like these candles. But we did invert it at some point. Price was holding in. We inverted there and we came right back. I just want to see something. Okay, so then price was just meandering on the side. And then when it came to market open, there's something very specific that ICT teach, that after the 9:30 candle, you look for the very first fair value gap. And the very first fair value gap between that was over here, but I actually marked this one out for some odd reason. But be as it may, that is a very critical level. And we could see price go down, and in this case it created a gap down, and I was fairly confident that we might want to run this low first, because remember, I'm looking to buy. Unless price was turning around and close above to go higher, then I most probably would have looked at it. But it's always good to see price take liquidity first and then invert a fair value gap. Now what you can see here, or what you will see here, is this blue line is obviously the target that we broke, and now we're looking to buy the market. We create a fair value gap here, the very next candle another fair value gap, and the next candle another fair value gap. Normally I don't like it when it stack up like that. I like to see price fill those gaps and then create one fair value gap. It would have been nice if this was the only fair value gap, taking out this low here, and then invert exactly like this. It aggressively goes back and close above it. That to me is like a high probability. But then you have this in the way. So price could go up there and then go lower again. But in this case, price went down and the body's closed within the fair value gap. So now it's an IFVG because of this white candle closing above. And then price holds within it, and then we break out. Then we go sideways again, and then we break out and we close above the 50% of this yellow fair value gap. I actually took a trade right in here, and then when this candle started moving up, my stop was just below this, and when it stopped there and created this little swing, I thought, no, I'm moving my stop to break even just in case, and then sure enough I got stopped out at break even with this big black candle. And then I thought, okay, well, there's another fair value gap here that formed with this big black candle, this white candle, and price stopped at the mid section and it went up and it broke those highs with wicks, and I waited for price to test again, and sure enough I took another long here, and then the white candle went up, went sideways, broke that high. I moved my stop to break even again, because that's my rule, and sure enough I got stopped out again. So now I've got two trades that I got stopped out for no money, and I'm getting a little bit frustrated because I missed this entry down here. And the reason I missed it is because of this fair value gap and this one. I wasn't sure, I wasn't confident enough. But anyways, this blue block here is the fair value gap that formed, that was holding price all along. And if you really look at price here, you'll see we make a low into that fair value gap, running these lows here. Then we create a low and we run away, and then we come and run those stops, those lows out again. But this low does not close below that one. Same thing happened, forms a low, stops all these lows out, but does not take that low out. So now it forms higher lows, higher lows, higher lows, higher lows. And that is an indication we are getting ready to move higher. And if you really read price and you sit and not focus on why is price not moving, these are key factors that tells you where the market's going. And now that we've got a narrative that we are ready to go higher, we want to buy the market. Every time the market goes to that wicks 50%, that's where you take your trade. 50%, you would have taken a trade there, but it lines up with your fair value gap, so it's always best to take it within the fair value gap. Then there's a specific pattern that I also teaches, the swing, where you get your black candle, and then the third candle closes above the first candle's open. And that would have been a nice entry there if you've taken it. I did take an entry here, not this particular one. I think it was in this fair value gap here. There was a retest and I took it, and then it slowly worked its way up till it actually hit our target. So what I want to show you guys through this that we just went through, this is a strategy that teaches you to wait. Do not try to trade the market on every day at a specific time, but to wait for a specific event to happen, like today, a news event. The red for the strategy, it was high impact news. It gave us an extremely good candle. It gave us some opportunities below here. Price was, obviously stuffing around here, and it could have, if you're not experienced, this would have been very frustrated for you to lose money. But if you just keep focused and you mark out the lows and you're like, okay, so let's see how this is going to play out. and eventually it will give you the opportunity to take a trade, and you can then obviously target the other side. All you need to do then is just try to get in his best possible place. And even guys, if you missed this entry, I mean, this is a good place to enter, but this is another fair value gap that's screwing with your mind, and that can throw you off par if you're not experienced. But if you missed any of this and you waited for price to break through these highs like over here, if you take that swing low to that swing high, that's an OTE, that's a fair value gap. It gives you an opportunity to take a trade. So it's the market. If you just know what you want to trade, that's all you got to do. Is you don't have to take it all the way down here to take a big upside. You can wait to get through all of this till something stands out to be clear. At this point, when we did all this moving around up and down, going up, coming down, going up, coming down, eventually we broke these highs and closed above them. And then now you've got direction. Okay, so we've already stepped into this fair value gap, consolidate, broke higher, comes back in this fair value gap, sideways higher, and this low to that's another OTE. There's no fair value gap here, but there's a fair value gap over here, another OTE. You don't get an OTE, but there's a fair value gap there. There's even an inverted fair value gap over here. And then, I mean, if you just take a trade from here to there, that's good profit on its own. So all I want to say, guys, keep it simple as possible. Don't try to overcomplicate the strategy. It's not that complicated. And yeah, so these lows equal, these equal this higher lows creates new liquidity. I won't be surprised if the market goes down and actually stab or close this fair value gap, and that will just mean taking all this liquidity out. So that's all that I have for you guys today, and I just wanted to share this with you guys. I've got a Telegram group that we post live levels to keep an eye. It's not a group where I'll tell you where to buy, where to sell, and it's not financial advice at all. It's just me reading price, sending screenshots of what I see, or if I take an entry on a paper trade account, and just to help you to see the market the way I see it. All you got to do is you got to follow the strategy and mark it out like what you see in a real life. Don't try to look at it after the fact and say, oh yeah, this is right, because you're not going to see it. I can promise you, when these candles broke down and it started doing a break up, and that was OTE for someone, but then you get stopped out. The minute you see, this was just a giveaway for me that I wasn't confident that something's really going to happen in here. And I waited, and I think I did take a trade here. And the minute I moved over here, because it was up, it broke up, I was at break even, and I got stopped out, which is fine. I'm fine if I'm getting stopped at break even. But then I sit back and I relook at everything. I mark out the lows and see if there's a tendency for us to actually go and run it. These three fair value gaps really got me confused today, and I didn't like it. But the strategy is to take a trade when you invert, when you got your opposite liquidity, and that's what I got to do. This was not a good price action, but eventually, gradually, we went all the way up there. So yeah, if you like or found any value from this video, give it a like, give it a share, leave some comments in the comment section below, tell your friends. Let's see if we can grow this channel together, and as soon as I get to 1,000 subscribers, I will trade these things live at no cost for free. And so have a great day. I'm most probably going to chat to you guys tomorrow again because there's news, and trade, stay safe, don't overtrade, and I'll chat to you guys tomorrow. Take care. Bye bye.